Hello everyone and welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is October 4th, 2025, and we're into the last quarter of the year. And remember folks, if you want to walk on this beach like Jimmy Buffett once did, then you've got to learn how to invest even better than Warren Buffett does now, and we're certainly doing that. And this week, well, the market made nominal new highs, but we're getting a short-term sell signal on the NASDAQ 100 stocks. And when we look at the Healthcare ETF and the Utility ETF, which are two out of the three top ETFs this week, we may be seeing the first step away from high flyers into safer stocks. Let's go on to our weekly stock analysis video. Eli Lilly is up 500% in 5 years, but it's having a tougher time this year, as is the entire healthcare industry. And it may be time to add to this position, but watch the video first and then you can decide. And our ETF video, the Healthcare and Utility ETFs, as I mentioned, were two of the top three performing ETFs this week, with the healthcare being the top performer this week. So the question is money beginning to flow out of the AI stocks into safer haven stocks, at least for now? Because on Friday, the QQQs, that was the NASDAQ 100 index, which has a lot of those semiconductor and tech stocks in it, was down on Friday, just a little bit, but just enough to see that there may be rotation going on in this market. And let us look at the S&P 500, and these are the Bollinger Bands, the blue lines, which are volatility bands. They measure the volatility of the market, and the center line here is the 20-day moving average. Now, see that the market went up to test that top band and then came back down below it. So it barely moved at all today, and in fact closed lower than where it opened. But it's a up day for the S&P. But look at this indicator up here. It's starting to turn down. So we have to be a little careful there. Then when we come down here to volume, we divide, and the green lines are volume on the up days. And we had 6 up days in a row. So maybe the market's getting a little tired in here. But you can see the up volume is starting to dry up a little bit. I shouldn't say dry up. It's becoming less. So the push up from this test of the 20-day moving average last week, or the week before last, actually, toward the end, and this push up, now the volume is starting to decline, but it was a nice little rally, and we'll just have to wait and see what happens on Monday. Again, we're looking at this top indicator up here. And when we look at the S&P 500, this is the short-term indicator, and we can see maybe it's turning over in here. And so we have a slightly higher high, just slightly, ever so slightly, over the past 2 weeks. You know, we hear every day, okay, the market's making a new high, but boy, we're only talking about 15 points out of almost 66,700 points. So we're looking at a slightly higher high in the market, but a lower high in this indicator. Now, it hasn't turned down yet, but let's look at the QQQs, which is the NASDAQ 100. So when we look at the QQQs, on Friday, the market, it did close down about 0.5%. And we can see we did get that turn down up here. So again, a slightly, very, very slightly higher high in here, but a lower high in this indicator has us a little worried here. And then when we go to a longer term indicator on the QQQs, we can see this indicator up here almost turning down. And then down here with the volatility bands, we see it didn't even go to the top band before it turned down. So we may be getting a little hint in here of money going into the healthcare and the utility index ETFs and coming out of the tech stops, the NASDAQ 100, which is the QQQs, coming out of these stocks here, because, boy, some of those stocks have PE ratios that are just unbelievable. I mean, you can't even fathom it. And very, very expensive stocks out there. Maybe we're starting to see a little bit rollover. But don't forget, the Federal Reserve is lowering interest rates, so the Fed is your friend. Always remember that. So even though some money might be coming out of those tech stocks, this market doesn't look to be falling very much at all. We're talking about little corrections that, well, back here lasted a whole 3 days. So we haven't had very many corrections all along back here. It was 5 days, well, 6 days actually. And so that happens all the time, and it's good for the market. So let the market slow down a little bit. It would be good for it. But again, with lowering of interest rates and job market drying up, remember the ADP, well, the Labor Department is closed now, so we didn't get the labor numbers on Friday, but ADP, a private agency, came out and said we lost 34,000 jobs this week, so or it's down 34,000 jobs from last week. That's a lot. So the Fed has to worry more about job creation or the lack of job creation, and it has to worry more about that than it does inflation at this particular point. In other words, they may have started lowering interest rates not soon enough, and therefore now they have to watch out for recession. Okay, and this week the SPY was up 8 points this week, which was nice. We have protection for October, November, and December. For those of you who want protection, about 12.5% below the market, and this way you can sleep at night. So if we get a bigger correction in here, they start throwing that R word around, recession word around, you might see a little pullback or maybe even a bigger pullback. So you don't have to worry about the big pullback because you have the SPY protection in here. And some of you have the QQQs, and this was up 8 points this week. And remember, last week the market didn't do much of anything, but this past week it had a nice rally coming off of that 20-day moving average. But right now it seems to be tiring out a little bit. So we have the put protection on the same dates for those of you who are in more of the tech industries. So therefore you can get either one. The QQQs are a little more volatile than the S&P 500. The puts are a tad more expensive, but this is the volatile part of the market. And so I personally like the QQQ's portfolio protection because if the market comes down, the QQQs will probably give up the most, but we're protected, so we don't have to worry about that. So, folks, we had a very, very good week after a lackluster week the week before. But remember, this is the weekend here, so you take your mind off of the market, go to the beach, walk around the golf course, take a walk around the block, be with your family, maybe have Sunday dinner with everybody. That would be nice. But most of all, over the weekend, stay safe, and we'll be right back here in a few days.